working in any capacity within the music industry to take part in a national survey of bullying and harassment.
We will take that evidence to government, the DCMS, and we hope and know they will act upon it by putting legislations and mechanisms such as the Creative Industries Independent Standards Authority in place to protect workers of the UK music industry. This data matters.
Nowadays, Vivi Brown is also a mum.
You've got daughters. Would you want them to be in the music industry?
It terrifies me for them to want to go into that industry.
Because of the psychological impact?
The racism, the objectification, the misogynoir, the patriarchy. But if they want to do it, I will equip them so that they can just bring this whole industry down.
Could the UK music industry be long overdue a Me Too moment? Katie Spencer, Sky News.
You're watching Sky News. Lots more still to come. Up next is Business Live with Ian King.
The top business stories live from the Sky News City studio. The price of car insurance rises by 43% in 1 year as MPs are told costs are deterring drivers from making claims. Troubled music investment company Hipgnosis Songs Fund agrees a takeover valuing it at $1.4 billion. Plus, shares of Easyjet rise as the carrier says its half-year loss will be lower than expected. Good morning, this is Business Live with me, Ian King. It is a very busy day indeed for corporate news. Let me talk you through some of the main stories this morning. And we start with news that the controversial music investment company Hipgnosis Songs Fund has agreed to a takeover by rival Concord, valuing it at $1.4 billion. Hipgnosis was founded in 2018 with the idea of buying rights to songs and exploiting their intellectual property rights in films, TV programmes and computer games in order to provide an income stream to investors. The company currently owns 138 catalogues with more than 40,000 songs by artists that include Blondie and Red Hot Chili Peppers. But the company has been mired in controversy over the value of those songs, and its shares have fallen by 40% during the last 2 years. Easyjet said this morning that its half-year loss would be lower than expected. The carrier, which traditionally loses money during the winter months, said it expected to report a pre-tax loss of between £340 and £360 million during the 6 months to the end of March. That is a £50 million improvement on the same period last year. Easyjet said this was due to putting on extra capacity on routes where there was stronger demand, as well as the early timing of Easter, during which it said trade had been particularly strong. The shares currently ahead by 3%. And Rentokil Initial said today it expects to spend £250 million this year on buying other businesses. The world's largest pest control company said it had done 8 deals so far this year, including the acquisition recently of High Care Services, the second largest pest control company in India. Rentokil's sales during the first 3 months of the year came in at £1.3 billion, which was up 5% on the same period last year, with growth at its strongest in the Pacific region. The shares are currently off by some 2%. Now, the legal services firm Keystone Law said this morning that the war for talent in the industry had subsided this year, even as it sees sustained client demand. The firm, whose lawyers effectively work as quasi-independent consultants and who are allowed to determine how, when and where they work, said that at the end of January it had 549 fee earners, up from 507 at the same point last year. Well, adjusted pre-tax profits in the year to the end of January came in at £11.3 million. That was up 23% on a year earlier. Well, joining me now is James Knight. He's the Chief Executive of Keystone Law. James, good to see you this morning.
And you?
What's driving demand just now?
Well, for Keystone, it's all about lawyers. We look at things differently. We grow by recruiting lawyers. We offer lawyers something that they don't get anywhere else in terms of lifestyle, money, and that is what's driving them to join us, because when they join us, they bring their clients. Okay. We support them. We provide the infrastructure. They get the freedom, flexibility of being self-employed, and they get the joy of a free, flexible life. And as a result, they do a very good job. They're impassioned. They deliver to the clients. And that's really what drives our growth.
So it's not necessarily that there's been an increase in litigation or anything like that?
It's no one factor. The legal market remains strong. But what we're seeing now is a post-pandemic world, which requires lawyers and general people in business to go back to the office. There's greater pressure this last 12 months than we've ever seen since pandemic. They don't want to. People like this hybrid life. They like working remotely. There's only one firm that really offers the sort of lawyers that we are seeking to attract that opportunity without pressure, and that's Keystone. And this is the same model that we started with 20 years ago, but what's driving our figures now is this post-pandemic world.
Lawyers don't lose something by not being in the office and working from home?
Well, we seek to put the best of both worlds. We compensate for our long corridors in a number of different ways. There are offices that they can work in if they wish to, but we put in events, parties, training, all of these things, so that there's a connection between each other, every bit as strong as they would have with the water cooler.
What's the typical profile of someone that's joining your business? How old are they, and roughly how long have they been in practice?
Well, the average is about 15 to, actually no, sorry, the average is 22 years post-qualification experience. But then we get, obviously, less and more, but also our senior lawyers employ their own juniors operating as Keystone lawyers in what we call pods. So the end product in terms of the age range is similar to a conventional firm. It's just that we resource it differently.
Do you feel that you're underrepresented in certain parts of the country? Is there room for expansion?
Yes, I mean, there is. We've been expanding for 21 years. We're expanding now just as quickly as we ever have. We are heavyweight in London, but then so is law. It is focused so much more here. As time goes on, we expand, we move, we sort of grow outside of London and in different areas. I mean, this is an ongoing journey for which I started the firm in 2002. We obviously don't start as a particularly sophisticated organization back then. The level that we are dealing with now, the level of lawyers, the level of clients, the level of work is beyond wildest expectations.
And what are you seeing in terms of fee inflation just now?
Well, it's calmed down a bit.
Okay, that's good news.
It last year was more significant. We have needed to put up our rates, but it does feel that is lessening.
Okay, well, when you say you put up the rates, roughly what sort of percentages?
About 5%.
5%. Mm-hmm. So that's, okay, not untypical then with the general state of the country then. Right.
Yeah.
James, got to leave it there, I'm afraid. Good to see you this morning.
Thank you.
Now, the average annual car insurance bill is now so high that drivers are being deterred from making claims, and the soaring premiums are very hard to justify. That was what the Financial Conduct Authority's head of insurance told MPs yesterday, and further evidence of soaring premiums comes today with data from the comparison service Confused.com, which reports that the average cost of car insurance is now £941, having risen by 43% in the last 12 months. Well, joining me now to talk about this is Steve Jukes. He's the chief executive of Confused.com. Steve, welcome to you. Why are premiums rising so much? Is there less capacity in the market, or is it down to claims inflation?
So a lot of it is driven by rising insurer costs. That's both a lot of that is driven by claims. So that's both the frequency of claims and then the cost of claims. Particularly driving the cost of claims are things like vehicles becoming more sophisticated and the technology being more expensive to replace. Labour has increased in the past couple of years. And we've seen some historic rises in car insurance premiums up to the numbers you've mentioned over the last 18 months. In the last quarter, though, we have seen the average price drop by £54 to around £950. So there looks to be some respite in the growth. Too early to call that a success, though, as overall prices are still very high, as you said, and consumers are feeling the pinch here and in other areas of their lives.
Now, the FCA has sought to combat so-called price walking, the practice of charging more to existing and, in many cases, loyal customers. Has it had an impact, or is it still going on?
Well, what makes this quite complex is that at the same time these new rules were introduced, we've seen significant premium inflation. So from a consumer's point of view, they will feel like they will see that their price is significantly higher this year than last year, in many cases a few £100s, and be wondering whether they are still being price walked. However, there are a number of different factors driving that rise. I think it's too early to say whether the introduction of those regulations has had the effect that the FCA wanted, but they certainly came from the right place and they had the right intent. And I think we actually have seen widespread change in how insurers are pricing. Unfortunately, so far consumers are not benefiting from that, and they'll still be waiting to see their premiums come down. And as insurers' business performance improves, which it is starting to, they'll be expecting some insurers to start passing those savings on to them.
You've found quite a lot of evidence of significant differences in pricing across various parts of the country. Isn't that to be expected, though, given that some parts of the country will have a sort of higher risk factor, risk profile?
Yes, I think that's right. In densely populated areas and areas where, for example, crime might be higher, then we will see a big disparity. I think some of the disparities that's harder for customers to accept are particularly in younger drivers, where the increases in younger driver premiums have been so extreme that actually a 22-year-old today will be paying more than they paid when they were 17 5 years ago, despite having, in many cases, built up 5 years of a good driving record. So it's actually the disparities by age that I think consumers are struggling with the most. And to some extent, as insurers' profits were squeezed over the past couple of years, some of the higher risk segments have been less well competed for, and therefore consumers are seeing worse price in those areas. It does present an opportunity, though, because insurers that reacted quickly to claims inflation and feel like they've got a grip on it and they've got their pricing in the right place can now be more aggressive, and we may see some insurance premium falls for some of those customer groups as insurers look again to grow.
Well, that's good to hear. What are you seeing just now in terms of switching activity?
Well, consumers are working really hard to save money at the moment, and as a result, we're seeing very high levels of switching activity, and particularly high levels of switching around. So what we do see is that consumers who do switch are still saving money. And there's a lot of competition for customers, and as a result, there's often someone out there who's ready to cover your situation for less than your incumbent. And so people that are switching are getting good results, and we're seeing actually the highest levels on record of switching activity from consumers, which I think partly demonstrates how they're looking to save money in every part of their life.
And of course, there are things that people can do to help themselves. For example, fitting an immobiliser, paying for their car insurance annually rather than monthly if they can, for example.
Yeah, absolutely. In some cases, if you can validly add a named driver that you can share the driving with, that can really help. I think consumers are scrutinising closely how much mileage they're going to cover, security measures. There's a number of things at the edges that people can do to make sure they're paying the right amount for the way that they're using their vehicle. And that's really important right now.
OK, Steve, we have to leave it there. Good to see you this morning. Thank you.
Thanks, Ian.
Time for a look at the markets now. And on the foreign exchange markets, the pound has continued to firm after yesterday's inflation figures, sterling up by just under 1/5% against both the US dollar and the euro. The single currency more or less unchanged right now against the greenback. On the equity markets, after last night's declines on Wall Street, during which the S&P 500 fell for a fourth straight session, there was a rally in the Asia-Pacific region overnight. As you can see, all the main indices in the region finished higher. The Nikkei, though, still looking at a pretty big weekly fall, currently in line for its worst weekly fall since 2022. Well, here in Europe, here's the picture just now. All of the main continental European indices in positive territory, apart from the DAX in Frankfurt, which is more or less unchanged. Talking points today include the Swiss engineering giant ABB. That's up 5% to an all-time high on the back of better than expected quarterly results. The French food and drink group Danone is ahead by 1% in Paris for similar reasons. Well, here in London, the FTSE 100 is also keeping its head above water just now. Obviously, we had a bit of a sell-off yesterday, but the FTSE currently 0.25% higher. Gains for consumer goods stocks helping drive that. Stocks with Hong Kong and Chinese exposure also among the leading gainers this morning, including Prudential and Standard Chartered, while National Grid is up by some 1.75% on a trading update. As ever on a Thursday at this time of year, a number of stocks have gone ex-dividend today. In other words, they've adjusted automatically lower because they're trading for the first time without rights to the latest payout. They include Croda International, BAE Systems and Unite Group. You can see on the screen. If you own any of those, don't worry, that's just because those stocks have gone ex-dividend today. Outside the FTSE 100, Wizz Air is up some 4%. That's in sympathy with Easyjet, which is up 2.25% just now, while the investment platform AJ Bell is up some 6% right now on the back of a trading update. To the downside, Dunelm, the home furnishings group, is off some 3%. Its results have come in below expectations, nearly 3.5% lower now, in fact. As for the oil price, well, that has continued to drift lower this morning. It's currently at its lowest level for a fortnight. A barrel of Brent crude will currently set you back $86.28 a barrel. That is off just over 1% on the session. Well, joining me now is Patrick Farrell. He's Chief Investment Officer at Charles Stanley. Patrick, good to see you this morning. Got to start with Hipgnosis. I mean, a member of the stock market's walking wounded for a while, and it's been put out of its misery.
It's certainly been thrown a lifeline, Ian. So I think, when investors were looking at it, it was quite exciting. Definitely a good sales story. Maybe some of the leadership and management has something to sort of, left thinking about. And I think, this bid from Concord, I think is probably a nice lifeline for people to sort of say, OK, let's get out of this. Let's hopefully get some really good management. And it's a good bid, 32% premium. Yeah. I think that's great. Yeah.
Size of relief all round. Yeah.
Yes, I think so.
and size of relief too among Easyjet shareholders who haven't had a lot to shout about over the last few years.
Yeah, look, I think all the airlines have really benefited from the people wanting to take some travel, and that seems to be continuing. So I think that's been a very good tailwind, if I can say, for Easyjet. At the same time, though, I think the headwinds going forward, higher jet fuel prices will really start to impact. And some of the inflation numbers that we saw earlier in the week had package holidays really starting to increase a little bit more. So I wonder where that tension is basically going to come in for Easyjet going forward.
Yeah, I thought it was quite interesting their fuel costs were flattish during the half, which, given that the crude price is up 17% since the beginning of the year, looks like they've done something quite clever on the hedging front.
Yeah, maybe on the hedging, but ultimately that's still going to flow through. So we'll see how that affects pricing.
Yeah, now another company that's caught your eye this morning, we had the chief executive on the programme not long ago, Foxtons.
Yes. So from a real estate perspective, the housing market in the UK is still pretty tight. And I think maybe going into spring, where there's typically a good sales sort of season, I think some of that impetus for people to go out there and actually sell has been one of the sort of key factors. But I also think that the housing market in general, there's been a lot of competition for some of the mortgage activity as well, and that's been keeping mortgage rates relatively low, and that's been a sort of key driver for completions to actually come through. So that's actually a really good result for the UK housing market, and obviously for Foxtons.
Yeah, Foxtons have got an activist shareholder on the register, which is trying to get them to put themselves up for sale. Do you get any sense that's gaining traction?
Don't really know. Can't really comment, Ian, but I think activists are playing a much bigger role in terms of the way companies are being managed, that's for sure, particularly the smaller ones. Yeah.
Now, not a listed entity, but nonetheless a company that's in a real firestorm right now is Thames Water. We've had some interesting developments there today.
Yeah, and I think ultimately the government's come out and said, no, you can't put this bill onto customers, and I think that's fair. And the challenge that Thames Water have with Ofwat is going to be an interesting one in terms of how they try to relax some of the regulatory guidelines that they've got, but they're in a real pickle because from a debt perspective, how are they going to get that debt? How are they going to raise that debt when a lot of the shareholders, and a lot of the big shareholders being some of the sovereign wealth funds and pension funds from around the world, are they going to fork out a rescue package? Yeah. So they've sort of pulled that deal. So it's going to be a little bit more difficult for them going forward, absolutely.
I mean, obviously Ofwat has been pretty clear thus far that, as you say, the bills aren't going to rise. The equity shareholders are going to have to put up more capital. Potentially, if this business goes under or into special administration, these shareholders get wiped out. But as you've just described, they're just the sort of people that we want investing in this country.
Well, exactly. So there has to be some consideration around that. We can't necessarily say, no, shareholders made some bad investment choices, let's put it that way. What are they going to do from here on in? Ultimately, though, that what happens to the company? You can't not have a water utility operating in this, serving 16 million customers. Yeah. So you have to have the right result coming out. So if it does get nationalised, then that's going to be a cost going forward as well, I assume.
Absolutely. Patrick, always good to see you. Thanks.
Great to see you, Ian. Thank you.
Still to come here on Business Live, why the advance of AI might be making IT infrastructure more vulnerable to attack. Stay with us.
I'm just about to start my Tower Power 2024 challenge, a sustainable triathlon from the Leaning Tower of Pisa to the Eiffel Tower to my hometown of Blackpool, all in aid of the Army Cadet Charitable Trust and in memory of little Jordan Banks, who tragically lost his life 3 years ago on a football pitch in Blackpool, Case. So trying to raise as much funds and awareness as possible. Yeah, so we're going to pop in and say hello to the Eiffel Tower, Kay, before we head back to our homeland, in fact, of Lancashire.
Yeah, indeed. So now tell me why it's an eco-triathlon.
So I don't know if you can see there, Kay, but there's my bike behind me. And that is probably the most sustainable bike on the planet. It's been made purely from coppice wood from my local forest in Hampshire, so hazel, birch, and willow. All the panniers on the bike as well, they are made from recycled truck tarpaulin. I'm eating vegan-based plant food ration packs, which are compostable. I'm going to be sleeping, camping in a sustainable tent. Yeah, we're going to try and give a little bit more back to the planet than we're taking. I'm certainly not suggesting I'm, super green by any means. I've been a serial offender of climate issues, traveling around the world for many years, all 7 continents. But I want to see what we can actually do from a sustainability perspective when we travel. I also want to try and educate myself and educate young people with lots of free online resources on the Tower Power 2024.com website. Super proud to be a national ambassador for the Army Cadets, which for me is one of the best sort of kept secrets in the United Kingdom, and an amazing organisation based on the principles of fun, friendship, action, adventure. We get young people outside, which is great for their mental well-being, their physical health, and we also teach them core values like respect, integrity, loyalty, courage, discipline, selfless commitment. So an amazing organisation, and I want to shout from the rooftops or the top of the tower about them.
If you forgot your pajamas, Emirates has got you covered. Fly Emirates, fly better.
Welcome back. Now, AI is offering huge benefits to the world, but the computing power needed to process the huge amounts of data it goes through is putting immense pressure on IT infrastructure, such as data centres and clouds. It's also making them more vulnerable to attack. Well, in response to this, the security and networking giant Cisco today unveiled a service called Hypershield, aimed at enhancing security around IT infrastructure. The company's also partnering with the design team at McLaren F1 on building and upgrading cars. Well, joining me now from McLaren's headquarters in Woking is Jitu Patel, Executive Vice President and General Manager of Security and Collaboration at Cisco. Jitu, welcome to you. How does this new offering build on traditional IT security?
Well, thank you, Ian, for having me on the show, and it's great to be here again. And security is one of the most pressing issues of our time, and AI actually exacerbates that even further. But the beauty about this is that while AI has the ability for adversaries to weaponize security, it can also have the potential for being able to go out and really strengthen defenses. And so what we did was we've actually taken a deep inventory on some of the biggest challenges that organizations are facing right now with security, and making sure that we can actually solve those challenges with Cisco Hypershield. So a few of them happen to be things like upgrading dated infrastructure is really hard. The amount of time it takes from the time that a vulnerability is actually announced to when an exploit happens is actually shrinking quite dramatically. It's now in single-digit days. It might get to hours or even minutes. And if you have an attacker that's assumed to be in the system containing that attacker, to making sure that the attack doesn't spread, that gets to be pretty hard as well. So we wanted to make sure that we fundamentally reimagined the way that you build the next generation of security, which wasn't something that was going to be built on top of something that already existed, but should be the first version of something completely new. And that's what we launched with Cisco Hypershield. And we've got some great response from customers so far, and we're really excited about what the potential is of that making the world safer.
So this is something that you built from scratch rather than put on top of something existing?
We did indeed. We actually are doing a lot of that innovation where we're making sure that we take certain problems that haven't been solved with the dated infrastructure and fundamentally reimagine what that architecture needs to look like so that you can go out and solve problems for AI scale data centers. Because as you think about AI, every one of us is going to have many assistants. Every one of us is going to have many ways that AI is going to help us. And that's going to increase the workload of AI quite dramatically within data centers. And as you think about the data centers reimagining, you're going to have to reimagine the security infrastructure underlying the data centers. And rather than having security now in a box, we need to melt security and have it actually as a core part of the fabric for the network that can be made available to customers.
Now, you're speaking to us from McLaren's headquarters in Woking. What sort of work are you doing with the team there?
McLaren's been a long-standing customer and partner of ours, and their business is so interesting because of the level of importance and emphasis placed on precision. On every millisecond matters for them, and high performance and low latency. And that's actually been one of the key areas that we've worked with them on, and making sure that we can power their network when they're actually in the middle of a race. But they also want to make sure that they're very secure. So the security and the collaboration and the networking side of our businesses tend to be areas that are really powering McLaren in the way that they operate their business in a very distributed mode.
And how long do you see this current partnership continuing, G2?
Well, we hope for a very long time, Ian. We've had that for many years. Zach Brown, who's their CEO, is a good friend of mine. We've actually done a lot of work with them, and we will continue to make sure that we can build solutions. The nice part about them is they really push us to the boundaries because of the way in which they have to go out and run their business. So it really allows us to think out of the box and actually deliver performance that we might have even not thought possible when we start working with them.
All right, G2, there was a lot more I wanted to ask you, but we're out of time, I'm afraid. We'll just have to do it again another time. Thanks for joining me today.
I'd love to. Thank you, Ian.
That is a very impressive building down there in Woking. I went there a few years ago with Sky News. Absolutely fascinating. Well, that's it from me for the time being. I'm back, of course, at 4:30 this afternoon for our afternoon edition. Hope very much to see you then. In the meantime, do stay tuned. Coming up after this short break, Jane Secker will be with you. Thanks for joining me this morning. Cheerio.